Hello students, welcome to the class on accounting. The objective of this session is to discuss and understand about financial statement analysis in general and common size statements in particular. So let's begin with an introduction. Students, as we know, accounting as a language of business communicates the financial information of an enterprise to various groups by means of financial statements. Financial statements are important to comment on progress or decline of organizations. However, a detailed analysis needs to be supported with the same to come to some decision which is facilitated by this financial analysis. Let us now come to the concept part. Students, let us now focus our discussion first about financial analysis. The financial analysis of companies is usually undertaken so that investors, creditors and other stakeholders can make decisions about those companies. Financial analysis is about the selection, evaluation and interpretation of financial data along with other essential information to assist in various decision making processes. Students, it can also be used internally to assess the operating efficiency, various policies and externally to evaluate potential investments and many other factors. The tools that are commonly used for companies' financial information includes financial ratio analysis, cash flow analysis, common size analysis. But before going in further depth, let us now first learn what is a financial statement. A financial statement is a numerical report covering financial information to express the financial results and the financial condition of the concerned organization. According to Smith and Ashburn, the financial statement is the end product of financial accounting, prepared by the accountant of an enterprise, the result of which represents the financial position and analysis of the organization. Students, analysis which is done with the help of financial statement serves the various listed purposes. They are measuring profitability, indicating the trends of performance, assessment of actual versus planned growth, assessment of growth potential for the organization, comparison with internal departments, comparison with other organizations in the industry, assessment of solvency and liquidity position of the firms. Students, let us now focus our discussion toward parties that are interested in this financial statement analysis. We know analysis of financial statement has become very significant due to widespread interest of various parties in the financial results of the business units. Students, the various parties that are interested in the analysis of financial statements are investors. Investors who have invested their money in the firm's shares are interested about the firm's earnings. As such, they concentrate on the analysis of the firm's present and future profitability figures. Management. The management is interested in the financial position and performance of the enterprise as a whole and of its various divisions. It helps them in preparing budgets and assessing the performance of various departmental heads. Trade unions. Labor unions analyze the financial statement to assess whether it can presently afford a wage increase and whether it can absorb a wage increase through increased productivity or by raising the prices of the products. Lenders. Supplier of loans are concerned with the firm's long-term solvency and its survival. Students, they analyze the firm's profitability over a period of time, its ability to generate cash, to be able to pay interest and repay the principal amount along with the historical financial statements so that to assess its future solvency and profitability. Suppliers, also known as creditors. The suppliers and other creditors are interested in knowing about the solvency of the business, that is, the ability of the company to meet its debts as and when they fall due. Tax authorities. Tax authorities are interested in the financial statements for determining the tax liabilities for the organization. Researchers. They are interested in financial statements in undertaking research work in business affairs and its practices. Employees. Employees are interested in knowing the growth of the profit, as a result of which they can demand better remuneration and congenial work environment. Stock exchanges. The stock exchange members take interest in financial statements for the purpose of analysis because they provide useful financial information about the companies to various stakeholders. Government agencies. Government and their agencies need financial information to regulate the activities of the enterprise or industries and determine the taxation policy. They suggest measures to formulate policies and various regulations. Students, financial statements give complete information about assets, liabilities, equity, reserves, expenses and profit and loss of an enterprise. They are not readily understandable to interested parties like creditors, shareholders, investors, etc. Thus, various techniques are employed for analyzing and interpreting the financial statements. The techniques of analysis of financial statements are mainly classified into three categories. They are cross-sectional analysis. Students, it is also known as inter-firm comparison. This analysis helps in analyzing financial characteristics of an enterprise with financial characteristics of another similar enterprise in that accounting period only. The second method is time series analysis. It is also called as intra-firm comparison. According to this method, the relationship between different items of financial statements is established, comparisons are made and then results are obtained. Students, the basis of comparison may be comparison of financial statement of different years of the same business unit, comparison of financial statement of a particular year of different business units. And the third method is cross-sectional cum time series analysis. This analysis is intended to compare the financial characteristics of two or more enterprises for a defined accounting period. Students, it is possible to extend such a comparison over the years. This approach is most effective in analyzing of financial statements. Let us now come and understand the various methods of analysis. Analysis of financial statements may be undertaken by different persons for different reasons. Therefore, the methodology that is adopted may vary from one situation to another. However, listed here are some of the commonly used techniques of analysis. The methods of financial statement analysis are comparative financial statement, fund flow analysis, common size financial statements, trend analysis and ratio analysis. Students, our focus today is to learn more about common size statement in general and common size balance sheet to be more precise. So, let us first begin with common size statements. The common size statements, which includes balance sheet and the income statement, are shown in analytical percentages. The figures of these statements are shown as percentages of total assets, total liabilities and total sales respectively. Take the example of the balance sheet. The total assets are taken as 100 and different assets are expressed as a percentage of this total assets. Similarly, various liabilities are taken as a part of total liabilities. Now, let us take our discussion towards common size balance sheet. Students, a statement where balance sheet items are expressed in the ratio of each asset to the total assets and the ratio of each liability is expressed in the ratio of total liabilities is called common size balance sheet. Thus, the common size statement may be prepared in the listed way. The total assets or total liabilities are taken as 100. The individual assets are expressed as a percentage of total assets, that is 100, and different liabilities are also calculated in relation to total liabilities. Students, let us take this example which will further clarify our concepts on common size balance sheet. Here is the example. Balance sheet of Messrs. Kumar and Company is presented herewith for the year ended March 2014 and 2015. If you can see, it looks like a normal balance sheet where balance sheet figures are reflected for 2 years. Liability side is listed, also the asset side of the company is listed. Now students, let us now analyze this balance sheet in further detail. This balance sheet is known as common size balance sheet. If you can see the pictorial representation of balance sheet for the year 2014 and 2015, we have 2 columns for each year. The first column says amount in rupees, while the another column is of percentage figures. Likewise, the same is reflected for the year 2015. Now, if I see land and building which comprises of the fixed asset, the amount for 2014 is 80,000 rupees and for the year 2015 is 1,23,000. Now, I have to compare the amount of land and building with the total assets of the firm. The total assets of the firm in the year 2014 was 4,38,000 and for the year 2015 it was 8,08,000. I have taken this total assets as 100%. Now, when I go back and calculate the amount or the percentage contribution of land and building to the total assets of the company, for the year 2014, the contribution of land and building as a total asset of the company is 18.26%. Likewise, the same contribution for the year 2015 is 15.22%. So, what does this reveals? Students, if we have noticed properly, we have converted all the figures considering total assets or total liabilities as a base, that is 100, and respective items under it are calculated accordingly. Let us now do further analysis in depth. An analysis of financing pattern for both the years reveals that in the year 2015, the company is more traditionally financed. That is, 74% of its finance is from capital and reserves, while in the last year, that is in the year 2014, it was around 64.83%. This reveals that the company in the second year has more funds from its own owners and it is less dependent on other sources for its capital. An analysis of current liabilities reveals that in the year 2014 that the company was largely dependent on other sources than owners' own capital and sources than the year 2015. Though the percentage of loan in total is reduced from the year 2014 to 2015, the company has increased its long-term loan by rupees 10,000. Students, if you analyze this balance sheet properly, there is a good improvement in total current assets portfolio for the company, which has improved from 5.48% to 10.54% from the year 2014 to 2015 respectively. While temporary investment figures reveals that the company has invested more amount in the second year. Also, creditors have been significantly reduced from 2.74% to 0.37%, which reveals that the company is paying its creditors on time, while debtors position, which is not so good, needs some improvement. Students, this is how the analysis for organization needs to be done using the method of common size balance sheet method. Students, let us now quickly discuss its benefits. A common size financial statement displays line items as a percentage of one selected or a common figure. Creating common size financial statements makes it easier to analyze a company over a period of time and compare it with its peers. Students, using common size financial statement also helps investor spot trends that a raw financial statement may not uncover. Analysis of balance sheet using these methods gives insights into the firm's capital structure and facilitates comparison with peers and rivals in the industry. This facilitates various decision makings. Students, it also highlights the cash position of an organization over a period of time. However, the analysis is not limited to the examples which are just shared. The biggest benefit of common size analysis is that it can let an investor identify large or drastic changes in a firm's financial figures. Rapid increases or decreases will be readily observable, such as a rapid drop in the reported profits during one quarter or the complete year. A common size analysis can also give insights into the different strategies that companies pursue. For instance, one company may be willing to sacrifice margins for the big market share, which would tend to make overall sales figure look larger at the expense of the gross, operating or net profit margins. Students, let us come to the conclusion part. With this, I would like to conclude by mentioning that we have finished discussing about the concept of financial statement analysis in general and common size balance sheet in much particular. With this, I would like to conclude my session. Thank you.